Good morning, traders. Welcome to the Traders Lab. Can I get a check in YouTube and the Bookmap Discord Trader Lab chat? Traders, welcome to the Lab. Can I get a check in Discord Great. Thank you. Thanks for being here, everybody. Thanks for visiting the Trader Lab. We have a lot to talk about today. Um, For those of you who are in the Trader Lab, in the Bookmap Discord chat, we had a lot of structured trades, which were in alignment with the trend and so far only long side. And I'm going to review those structured trades, which is what I do here in the stream. Um, if you are visiting for the first time, there is a library of PDFs of these structured trades you can download and study. Also, a library of webinars that'll give you some idea of how these pieces might at times fit together. The goal of the Trader Labs is to help traders build out the business side of trading and to understand what I think is the reality of trading. And while everybody does their own thing and your mileage may vary, and as you will note, past performance is not necessarily indicative of future results. It's really up to you to do the work. Ultimately, the business of trading is extracting an edge or a statistical probability of one outcome over the other. That's the real world of trading. Not a video game, not an indicator-based process, though indicators might fit into it. The primary purposes of the market is an auction process. And this stream is about integrating Bookmap order flow tools with auction market theory. In other words, how the market works. I think many traders think the business of trading is indicators and trying to put an indicator on a rotation. And now next time, you'll do whatever that indicator, red light, green light, or combination of indicators suggests. However, without knowing if that process actually has a possible edge or positive statistical probability, you may actually be operating in a negative probability or over time a guaranteed loss. That's why metrics and vetting is a key part of the business side of trading. And to see this participant interaction and behavior, I use a tool called the volume profile, and this is done in the intraday developing time frame or fractals. Think of the market very much like higher time frame going down into shorter time frames or rotations, and it's really simply a Russian doll, top down and then bottom up. And that is what the objective of the Trader Lab is to help you have a basis or understanding. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. By the way, grab a pen and a piece of paper. I'm going to be moving quickly today. You're going to need it if you want to get the most out of this, to take some notes, because I will be giving you some statistics that may or may not apply, but you will find that the more data you can collect can help you psychologically position, and everything is always random. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss. It is not suitable for all investors. An investor can potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is a stream that reflects structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. You don't have to be a Bookmap subscriber. You won't be solicited. So what I do is I start at the beginning, and I do highlight structured trades that are available to everyone, market mechanics, context, and I do a narrative. However, if you're in the Trader Lab, you would already have these structured trades available, so you would either be able to follow along or anticipate them where they might show up. And this is part of trading, is having a plan, and it's not making it up as you go. It's anticipating your vetted setup. And the business of trading is not getting involved in the middle of nowhere. It's only getting involved where you know, because you've done the work, that you have a statistical edge. Now, it's work to extract it. But if you want to have a business, it takes work. And you're also competing against other retail traders. And I would suggest most of them have not done the work, don't understand the business of trading. They are caught in the fantasy of trading. And there's a big difference between what we think trading is when we start and want to become traders and what it really is. And I suggest to you, and this is just one way to experience and interpret the market, that maybe you reframe what this really is. So let's take a look. First thing, grab your pen and piece of paper. Here's some statistics. I'm only going to spend a couple of minutes. Now let's go higher time frame. 4117, and we've discussed this a number of times here in the stream, is an upside target. And the reason for that is, if you look at the higher time frame, that is the consolidation we broke out of, I think, and I don't remember which day, why we did at that time, but we broke out, consolidated lower, then broke back up, and we've been in a big range. That outside, if you look at your RTH candles, you'll see 4117 is an outside edge. What is out at an outside edge of any structure or consolidation? Quick answer. YouTube, there's a 10-second delay. What is at the top of any consolidation in any fractal or time frame? Trader Lab in the Discord, that is correct. How about YouTube? Remember, this stream is to get you to think and anticipate. In the business of trading, we are always anticipating possibilities, and you want to know what's on the other side. That's correct. Stops. And what are stops? I know, we know what stops are, but what are they for the traders on the other side? Stops are fuel. What happens? What do buy stops do? They become market orders. That will potentially accelerate the move, because higher time frame participants have their stops on the other side. So as you go up in time frame at more significant edges, the potential moves get more extreme. Does that make sense? Now, of course, the market never has to do anything, by the way. And the other part of that is, we will have counter rotations on our way. So that's part of the fractal nature. So the market can come down before it goes up. And this process of stops or fuel on both sides of the market exists all the time. So if we get overextended in any fractal, we can counter rotate, take stops, and come down. How far? That's the mystery. However, if now let's think about this. If you were short, I'm just throwing a scenario and then I'm going to move on. If you were short and the market counter rotated and you see you're in trouble, think of this. And we know the fuel is above 4117. Would you be now short-term traders, if you're a counter trend trader, might be selling into the counter rotation. That's a different topic. What would you do if you were short though? Would you be buying the counter rotations to cover your short if you perceived you were on the hook? Think about it. That's what creates the buying. Buyers getting long, shorts covering, squeeze. Does that make sense? Write that down. Here's the stats, and I'm going to move on. You notice I'm trying to rush here a little bit. We got a lot to talk about. Write this down. Now, this is based on opening higher out of range. And remember, these statistics are not context sensitive. They're only sensitive in relation to yesterday's RTH. Okay, so there's more that goes into this, like context. What did we do yesterday? We filled the gap. We couldn't get into the range. We tested yesterday's high. We took out the week longs. Remember, write this down. Market goes up to go down, goes down to go up, goes down to go up. Responsive selling. Is the stream frozen, guys, in Discord? Yes, no, I need an answer. TB1 is frozen? Which one? Yes, yes, yes. Is it one or two? Is two working? Okay. All right. So it's one. Let me kickstart this thing. Hold on a second in YouTube. I've got to do some abuse here. See if I can't. Oh, wait a minute. No, it's not frozen. I haven't moved it yet. You guys are making trouble. I'm telling you, you guys are very difficult. This is what you call your preamble. Okay, write this down. There, in this context, which is now, and you're going to like this maybe, overnight high, which is up above us, is 76% probability we'll take that out. Okay? The first hour high, which is called the initial balance, and you'll see IBH. Don't worry about the terminology. There's a 68% probability we'll take it out. All right? The previous high, there's a 63% probability we'll check it out. Okay? And then they start going down. Overnight mid, 62%, previous close, 48%, et cetera, et cetera. It goes down. Now, what did we do? We opened higher out of range. What's the context? Up. Everybody tracking. Okay, so let's focus. So here's the open. This is going to be interesting. Here is yesterday's high. Here's the overnight mid. Here's the overnight VPOC. Did you write those statistics down? If you didn't, tune in. Focus. Here we go. RTH open 8:30 Central Time. I'm going to go into minutia. I always do this the same way. Why? This is what I do. Because I need an edge. Now, we have structured trades, right? And remember, when you open higher out of range, we anticipate behavior. And what is the first thing we anticipate opening higher out of range? Responsive selling, exactly. In other words, if you are long, theoretically, and the market opens higher, there's a couple things we might see. First of all, something called responsive selling. Write this down. Responsive selling in an uptrend are responders. I know you like the definition to the higher open. They are responding and taking some profits. Are you guys with me? Now, the nature of responsive selling, it's a weak side, but we don't know, right? So we open in a gap. What happens with gaps? Isn't the potential to fill the gap? Now, you don't know. So where's our landmarks? Let's go back. Overnight mid, 62%. Previous high, 63%. Are you guys tracking? Are you guys tracking? So we're looking, watch. Here's the open. Let me show you and share something that you might, now look where we are, half second into the open. Now, I always discuss, when I discuss the open, it's about a separate trade plan that you anticipate. Remember, trading is not making it up. It's saying, if this, then that. If not, then what? So we know the potential for responsive selling, profit taking. So now we're going to watch the following. This is the session volume profile. All it is, don't worry about it. It's a representation of volume and price. That's all it is. It's very simple. I mean, it looks weird, but it's simple. This is the chart volume profile. Both of these reset at RTH open, which is right here. So it's measuring the volume starting at RTH open. You guys with me? Now, this yellow line is where the volume is. Now, what this means, and the way it's created, and I'm going to open this up. This is how Bookmap. Now, this is only 2 ticks. All right, so don't jump out a window. But with Bookmap, we can see inside. All right, and this is why I started using Bookmap in 2015, and it was rather raw product back then. you know. But Bookmap is incredibly innovative, and you will see if you follow the development of Bookmap that they're continually adding tools to give us more insight. Remember, we're competing against other traders, primarily retail traders. We can't compete against hedge funds, high frequency traders, algos, the banks, the trade desks, the prop firms. Not our game. Our game is other retail traders. So let's see what we can see that maybe they don't see. We have statistics. So we are looking at the open. Let me come back to this and follow. By the way, if you're in the Bookmap Discord Trader Lab chat, you'll be able to review this stream exclusively if you're in that Trader Lab over this weekend. So you can do replay screenshots and the rest of it. So you can maximize your benefit from your investment and time. So let's watch. This is retail. Now, this is 1 second, but I'm going to show you microstructure. I'm not saying you can act upon it. I'm showing you microstructure. This is retail. Now, in the micro, this is very sensitive because it only started here. This moves down, suggesting there's more volume here than up here. Watch what this says, and this is microstructure. And it's not a recommendation, it's about interpretation. So this right here shifts down, saying in a microstructure, and these are not actionable, they're informational. Remember, the context is up, and we have no idea. It could just open here and run like a bullet train, right? Too high. Watch. Seller, that's your responder. Pull back to here. This is a Trader Lab short, except, underline, except, this is a structured trade in the Trader Lab. Now, when I say it's a short, think about this. If the context is up, is it a short or is it a short trigger for the responsive seller? Are you guys tracking? And now you need to be looking at the statistics. I'm in a bullish scenario. We filled the gap yesterday, couldn't get into yesterday's range, and the buyers bought it up. What happens today? We open higher. And what do? We fill the gap. Watch. And I have a selling trigger. Watch. Just watch. Watch what happens here. Now we get a buy trigger coming up. Watch. Now, this is not necessarily actionable for you guys. I just want to show it to you. Too low, break high. Now, we know there's stops here, right? So you have to be very careful. Pull back and check. Is this too low? This is a story, and this becomes a potential long. It's extremely aggressive. And again, I always suggest this is a separate trade plan. Very aggressive. You could easily get, as we say, thrown under the bus here. So this is a long in the Trader Lab. This is a long in the Trader Lab. This is a long in the Trader Lab. You have to get risk neutral. And I'm not, these are not recommendations. We have statistics. Let's go back and look at the statistic. Where to go? Got to pull this up for you. I just want to show you something. Not saying it's good. I have no opinion. Overnight mid. You guys tracking? What was the stat? Overnight mid. And I don't know where it's going to go. Remember, 62%. But here's what I know. If I see the responsive seller, there they are, and I have a statistic, and it's this, overnight mid, overnight, yesterday's high, right? I check one of my stats and I see the buyer. Okay, right here, I don't know. This has moved down. This is suggesting the possibility to come here and come down. And it's a narrative. I know I'm in minutia, but this is at least a way to think about interpreting participant behavior. Sellers, you see them, right? 20 sell stops come out. Thanks for playing. And potential to fill the gap. Again, don't know. Okay? And remember, statistics and areas and levels are I always say horseshoe, write this down, horseshoes and hand grenades, because it's not precision. It's areas of potential behavior that we saw behavior previously that was material. Market can do anything. So right here, we hit a stat, no clue. I'm going, and this is how I'm going. I'm going, is that it? Because I don't know. Now I have to wait for a structured trade if that's your plan. Here, too high, too high. So this is too high. When we change behavior, and this now becomes, and it shifts up, too low. Now, I mark these. I call it a variable high volume node. And again, I only want to be long unless we fall into the range, and then I'm going to, turn the bus around. But until that happens, I'm thinking, remember, higher time frame, 41.17. Whoop, that wasn't so good. Let's try this again. Does that make sense? Why would I get short? And we had major report, right? And look at the reaction of the market. Are you guys tracking? Tell me you're tracking. And now I'm going to be moving along quick, but I don't want to move on until you see how you might interpret behavior in real time. Yeah, 5 overnight VPOC was a possibility, but we have a gap. And yesterday's high is a high probability target. It is not a short because of the context. Does that make sense? You see, it's a narration. We know it can do anything. It goes like this. Well, if this, and you see the selling, remember, too high, shift down, suggest selling. If this, then that. Okay. If it doesn't do it and we just blow off to the top and I see the VPOC migration, that's a structured long. And of course, it doesn't mean anything in the sense of, you put your trade on, you put your helmet on, you either make a donation to the Retired Floor Traders Fund, or your trade works and it's just a statistical, probability of an outcome. But since the market, we want to be long, and we have all the evidence that 41.17 might be on the hook for a potential acceleration outside of the consolidation sometime today, it makes sense to me to want to be long, and that's all posted in the Trader Lab this morning, right? And again, it's only maybe. Every trade is random as far as the outcome. So anyway, this is the key. Watch. And so there's your seller. This is the buyer. And let me show you minutia. Again, sellers, sell stops, minutia. Just showing you how Bookmap might be helpful here. Seller, seller, seller. Where's the seller? Buyers. Seller, seller, seller. Where's the seller? Buyers. And here's the other way I look at this. This is delta. So red bubble sell, that means market orders. They're crossing over. Buy delta. The sellers are stronger here by a little bit. And what's not happening? If you see a seller and they're not making progress, that potentially means that, don't forget, when you see a seller or delta, what it means is that's the aggressor. But there, in futures trading, there's always two participants. It's not one side. It's not like shorting a stock, What it is in futures, there's always a buyer and a seller. Okay? So I see sellers, and look, this is not a long here for me. This is a suspect because I don't know. It could just be a counter rotation. I'm clueless. No seller, buyer, seller, 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 no progress, no seller, buyer, buyer, sellers, no progress. Minutia, all right? Not anything to do anything with. Buyer, 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 no sellers. You see? Seller, nothing. So that is, watch. More buyers. Just showing you how to read order, not even order flow. I'm showing you how to read volume. Okay? I'm just sharing this with you. Just a thought. Now, up here, this was too high. This is retail. Think about how the market works. It's based on the auction, which is participant behavior. And if you're new to this, I'll give you the 30-second short version of what is an auction. Shopping. You go to the store, If you perceive, and this is where the high volume is, you see that there? High volume is the same thing that happens in your shopping experience. There's a retail price, fair. The seller sells it to you there. You buy it. Your can of tuna. I don't know why tuna is $1 a can. If the tuna goes on 75 cents a can, and you think it's worth $1 because you want to buy it on sale, it comes back to retail. Okay. Now here's the other part of it. If the product goes on sale, is the seller going to keep the price here as long as the buyers are absorbing it? If you see the product on sale, 75-cent tuna, what is the seller going to do? They're going to raise the price. And if you want tuna, you got to pay up. Now, if you don't want tuna, you're not going to pay, and the seller has to lower the price. That's why you see rotations. It's constantly checking what's fair, what's unfair, and it does it all time frames. Now, let's look at the first long. And again, you have to vet all these ideas, and they are all available to all of you in the Bookmap Discord Trader Lab chat. So here, this was too high. Remember, retail drops down too high. The volume is filling in down here, which is why there's more volume here. But remember, where are we? Not even 1 second. So this is why I say the open is maddening, and you have to have unconscious competence. You can build out a plan for this, but you got to be experienced. It's fast. Watch. So, too low. Back to retail, which says too low. Watch. Pullback to too low. VWAP. I mean, I know it's fast. Actually, that's 5 seconds. This is 10 seconds in. This is the first structured Trader Lab long here. Here, stop goes under here or under here, subject to your plan, and then a helmet. Your job then is to get risk neutral. So whatever the distance is from your entry to failure of the structure is where your stop goes, and we're assuming a two-lock configuration, and I'll be moving along in a moment. I just want to show you. Then you need to get scaled to pay for the stop on your runner. Now, next, what is our stat? We have a 76% probability of getting to the overnight high, okay? And a 68% probability of taking out the first hour's high. So let's look. So let's look at the long. So this is a long. Where are we going here? Remember where we're going. And there's a number of long opportunities in here. I'll show them to you. VPOC migration, too low. The volume is now up here. Look, I'm going to show you something in profilage so you understand what this means. Going fast, too low. I mark it. Remember, variable high volume node. I am tracking the auction because the participants, you, the shopper for S&Ps, are demonstrating where you're willing to buy. And if this becomes too low, the sellers are going to move the price up. You want S&Ps? This is now the retail price. Too low. Now, the thing to understand is we can always come back to the store and check the price. You like shopping down here? You might come down and say, can I buy my tuna here? Well, no, it's up here. No, we're not selling it to you here. Okay, I got to go back here. This is the potential. Now, over here, you see this? This is called in a distribution, but in our language as traders, it's a consolidation. Because what is a consolidation? It's a rotation, right? Inside the consolidation, where it's crisscrossing, there is volume. That is kind of the sweet spot. And I think of it kind of, and I use the term kind of, like support and resistance in the sense of what did the participants say about the price? And the participants are buyers and sellers. So they said, nah, it's too low. We're out of here. Oh, that's too low. We're out of here. Now this is retail. Watch. So now we're moving along. Okay, let me try to move the bus here for you guys. This shifts up. This now is your variable high volume node. Follow the story very fast. And again, if this is not your thing in the sense that you haven't developed ability to read on the fly, this is where intentional practice comes in. So let's watch. Watch. Let me get. This is the next area. Remember? Too low, auction. Shifts up, too high, right here. Too high. What do we anticipate? Where are the stops? VWAP, mid, and this is too low. Let's watch. This is a potential long. Now, if it doesn't fit your plan, and I'm going to show you the trigger. Let me show you the trigger. You'll find this issue. Now, this is not for everybody, guys. I'm going to say, if when you're starting out with this, I suggest you are very structured, and don't let FOMO trigger you. Like, oh, gee, I wish I took it, right? Don't we all feel that? Those emotions are part of trading, but they're not part of the business. They're the obstacle, actually. But let's look at this. Too low. Volume now moves up here. Chop, chop, chop. That's your consolidation. Right here is the volume. This is the developing daily volume. So all the volume, and that's reflected over by all the volume for the day. In these fractals, which is the same process, that's volume. Let me show you. I'm going to show you microstructure. Hope you're getting something out of this. You have questions, post them. I'll do my best, okay? I just am trying to race along. So, too low, which we don't know at the time. But right here, you see this? Right here is your chop. So, consolidation. You see what the market does? It runs, and that's what creates low volume. Outside edge. Outside edge. It didn't consolidate. It just ran. The nature of the market in all consolidations and all time frames is to come back and check, and rotate. This is what we get in trading. So in a daily developing fractal, we're going north of the border. In the developing more microstructure, it rotates, fractals. So we are actually trading rotations. And if we think the trend is up, maybe, then we want to try to get outside, or at least observe the potential to check a poorly auctioned location. So this is why, if this is too low, this is support. Now we come up to this volume, potential to rotate. Right here, you blast. Let me show you. See the micro high volume structure? And there is your blast potential, because here's your volume, to do this. Our variable high volume node is here. So we know this is retail, and this in the micro developing structure is the same thing, except it's in this little fractal. So this is what trading in fractals is. Now, if it makes your head spin, don't worry about it. It makes all of our heads spin. Now, so this is too low in here. This is now migrating up in the higher developing daily time frame. I'm using a similar process, you see. Now, here, too low. Bang. So in here is a potential long or not. Watch. This right here says too high, and I'm going, where's my next trade? Anybody? VWAP, mid, and back here. Okay? Too low. Right. Remember, too low, too low. Too high. See? Counter rotation. When I see that, I'm anticipating this. This is the next area to observe out to here potentially. We don't know for a long. Watch. And the trend is up. Everybody knows that, right? So this micro high volume structure, and this is fractal, and if you don't get this and you go, I don't know, don't worry about it. There's plenty of buses. Now, what I do, and this is, I'm not suggesting anybody do what I do because I have some experience with this. I know what this is. I see the buyer, okay? I see this move up. I know this is too low, right? Or I think it might be too low. And remember, the market could do anything. It could come down here, it could fail. It could do anything. A Fed speaker opens their mouth, ECB, Lagarde. By the way, we're only into the market here 2 minutes to watch. So, comes down, check. Now, this is a triggering structure. Watch. Volume, too low, chop, too high. Check that microstructure. And this, you have VWAP, mid. I mean, you could just as well take a stop here like the rest of us. Don't think you're special. We all get whacked. Break high, pull back. This is a Trader Lab structured trade right here. So if you're not messing around, this would have been a structured trade here also. So along here, if you're very disciplined, I consider this, remember, horseshoes, hand grenades. I don't have a problem with this. But if it's not, if you're very disciplined, um, you know, then you wait. Where's the next Trader Lab structured trade? It's right here. Too low. If this, then that. Write that down. If not, then what? If this is too low, now this is too high, the trend is up, we're out of range. We know let's put it back together. The shorts are on the hook, then what? Well, if I can't get somewhere, then what? Then, and I see buyers, then what? I want to get long. Now, again, I can get, there's stops under the mid, there's stops under the VWAP. If this, then that. If not, and what's the not? We didn't get back here. We didn't get to here. Even the VWAP. That's pretty darn bullish if you can't get back here. Break high, pull back. From the other side, see, pull back. From this side, down rotation. Break, didn't get here. That's a structured trade in the Trader Lab. Break high. Too high, trend up. Pull back. You can't fall under. Long, stop under here. Are you guys tracking? I know I spent time. I want you to see how to read. This is our target. Remember, overnight high, 76%. Is everybody with me? Clarence, it's a regular RTH VWAP. The one below, the pink, this one above is the full session VWAP at 40.99. And then you have the overnight high stat. Are you guys tracking? How we doing, YouTube? Throw a glass of cold water on your face. I know this is probably making your head spin. I understand. Is it making sense? This is what auction market theory is. It is a narrative of participant behavior. Understanding we're in a random environment, and I always say I'm clueless. Now, clueless doesn't mean ignorant. It means I'm open to anything that I can detect that's in alignment with my trade plan. And as long as my structured trades show up, no matter where, what, when, how, my job is to follow my plan and accept the randomness of the rotations. But if I can read the behavior, which is what auction market theory is about, watch. New retail price. New retail price. Too low. Potential long. Not saying because here's a target. See? Stat. How would this trade be okay? Would this trade be okay for you guys? Just asking. Now, 4,100 is important because of this common strike price. The other thing we know, now here's kind of ways to think about this. What is your trade plan? For me, And at least for the Trader Lab, now I do other stuff, and I'm not saying it's good, bad, or indifferent, but don't forget, I've been doing this almost 43 years. So I have more screen time, right? Sometimes I'm wondering, gee, maybe I should be better because I'm always thinking I can improve, right? Can't we all? I'm not a Michael Jordan, but I want to use a comparison. High level athletes continually practice, do replays, watch tapes, get out on the court, spend hours doing the same thing. How many practice 3 pointers do you think Michael Jordan um, did to be at the level of performance? We're not any different. Um, Part of this is, like I say, it's like reading music or translating a language. How do you get good at unconscious competence? So you know. So in other words, when I see this, I know what it means. That's all. When I see the structures like this consolidation and I test it, I know what it means. This is micro high volume. It's too low. I can use this to trail a stop if that's part of my plan. I get this, it breaks down. This is a micro selling structure, but it doesn't take this one out. All it is counter rotation. I take it out coming the other way. That tells me higher. This shifts up. Too low tells me higher, but I have a target. So for me on this trade, I could be done if I'm running a 2 lot, or I'm using other processes to manage. Watch. If you're trailing here, you'd either target the liquidity or you'd get taken out. It doesn't matter. But what is this, guys, in the Trader Lab? What is this in the Trader Lab? Help me. What is this? Price check. I call this a price check on aisle 3. Now, when I was a kid, I worked in a supermarket for a while, and they'd send you, I don't know if they do this anymore, but go down and check that price. You run down. And what this here is your consolidation. Break low, break high. This is a reversal. Now, in a bull trend, if you think maybe the trend is up, and let's just pretend it might, because that's all you got. Where's and this is micro, then where might we come back and check? You're a shopper. Is this real? Is this fair? Or is this the unfair price in the micro? This is actually a short, but not a short. What it is telling me is counter rotation. The way I tend to think of this is I can read this, and so can you if you think about what it says. And there's your chop, 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 chop. Let me isolate it. I just want to show you what I think of as a fractal. Watch. I'm going to open it up. Now, these are not shorts. They are suggesting, underline, here's your micro high volume. You see it? Does this look familiar? It's the same as what's over here for the developing time frame. There. I want to use the higher time frame to lean on, but I use these little fractals to read it. And it's not a short for me. What it is potentially it tells me there's a reversal, and then I have choices. I can do nothing with it because I'm in a higher time frame and my stop is outside because I'm going for 41.17, or subject to the time frame I get aligned with, that my groove. You guys have heard the term groove. I may get out looking to put it back on. But the problem you might have is you might only get a little bobble, pick some stops, and then you're out of the trade. This is where vetting a trade plan comes in. And it needs to be aligned with the context. So when I see this, I anticipate counter rotation. So look, and I don't know. Remember, there's my counter rotation. Now, let's go back. What's my next Trader Lab potential? A couple things. We have a couple structured trades in the Trader Lab. This was right here, too low, right? Retail moved up. This is minutia, too low. We have a structured trade in the Trader Lab called VWAP to VPOC. In this context, that is a viable trade. Now, the issue is wherever you enter this thing, and remember there's stops right here, right? Wherever you enter this thing, this is an obstacle. However, underline, the trend is up. So subject to your trade plan. We test, we again don't get back here. If this, then that. If not, then what? So, watch. Where do we test? The variable high volume node. I got to mark it. Remember, the auction is a story. These are Trader Lab structured trades. Now, the thing about this is you got to take all of this and vet it. You may not have an edge statistically to participate in this right here, because this is also a structured trade. So do you skip this because you know there's stops here and under the mid? You see, you need to look over the large sample size of what extracts that edge for you. So you have two things. VHVN, and these are in the PDFs. I call a variable high volume node. This is called VPOC migration. It's all in the streams. It's in the primer webinar. You guys can download 60 PDFs. Enjoy yourselves with those. You'll see a lot of structured T-Lab trades. And the primer webinar explains the concepts behind all of it, so you understand why. And it's always maybe. Then it's about the business of trading. Your job is to wait. It's like waiting for your bus. Your job is not to grab these rotations just randomly, because they are random. You need to be anchored and be consistent. So this is the next Trader Lab long. Now, right here, you might be looking for this. Here, you see the buyer. They pull back here. Price check. Trend up. Watch. It's a long. This is your resistance right here. You'd have to scale ahead of this, because this is where the volume was. And we broke away. So let's look at it. So the way this works is if there were sellers here and this migrates, structured trade, again, understanding you could easily get thrown under the little bus. Long, you notice here, let me show you, I'm going to show you. This microstructure, let me open it up for you. I want you to see how to think in auctionees. Language. We are speaking a foreign language. Here is chop, 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 right? The chop is a consolidation. So we have volume here that went off at the liquidity, and we have volume developing here. So right in here is volume, okay? If I get a long, where was the last location in a fractal? It was too high. It's here. If I get long here, I need to be scaling ahead of the last location where we counter rotated. Is that logical? Watch. Okay, this is the volume. The volume is here, here. So if I know coming down, this is too high, and you see the break. If I get long, this is now in the microfractal too high. I got to scale here in case sellers come back. Is that logical? Great. Thanks, Don. Okay. So you notice, let me show you the behavior. You get long here. Look at this. This is how you interpret, and again, it's only maybe, how you can dance or interpret the behavior. If we know in this structure it was too high, which created this, and we have a structured trade that says too low, we don't know, right? And let me give you the and we came back to a too low area, which is this. See? Symmetry. So here, there's your long. Here's your scale ahead of the volume. That's it right there. See it? Bang. These guys here sold it because it was in the fractal too high. They're in the counter trend, or it's just profit taking. I prefer, since I want to only be long at the moment, I don't know about you, but me, I'm not smart enough to know the high of the day or the low of anything. So, too high, scale. Stop, goes below. Watch. Another long. Where to? Same behavior. Bang. You see it? Can you see how you might read the story? Read the story. Scale, scale. Stop under here. Stop under here. Are you guys tracking? Five in. I'm showing really navigation, narration, and behavior. So when you see a structure like this on top of your trade, if you have a vetted plan in a structured trade, which is what this is in the Trader Lab, you need to be looking over here, what happened here. This is what happened. So that sets up my opportunity, but it also sets up my obstacle. So my plan, I have to know when I get in, wherever I get in this thing, and you might not have range, that I need to get a scale ahead of this. And that's why you see it bang and come down, you see. So now here's the other thing about a trigger. Let me show you another little piece. This is a triggering structure. Now, mere mortals, in other words, I can read this, and when I see the buyer, but I'm buying very close to the obstacle. If it doesn't fit, and it's like a point, if it doesn't fit your plan, nada. But watch, this is a microstructure in alignment with the whole day. So retail in the developing time frame, too low in the developing time frame. Microstructure, auction in here only. Fractal, too low. Break away. Okay, I can't get in. What am I going to do? You say. Watch. Is it really too low? Test. Long. Scale. Okay, but now you have something to lean on. And what do we already know? This is too low. If this, then that. If not, then what? If in the microstructure, this is the same thing in fractal as this is for the whole day. This is the whole day fair price. Micro, this is too low. This was too low. Same process. This is too high. Scale. Watch. And then either you get stopped out and you have some choice words, or you're back in alignment with the trend. And now it's only 8:46. How many opportunities have you had? Here's the thing. These are structured Trader Lab trades, and everybody needs to vet the trades because clueless. I don't know. Do you? Watch. VPOC migration. Retail. Too low. Are you guys with me? Clarence, no. We have many triggers and structured trades in the Trader Lab. There's not a best or anything. There's just what might happen. Other than that, we don't know. So the volume point of control, and it moves around. Remember, it's monitoring volume for the whole day. Now, as this fills out, you see there's more volume here. It sets up, these are distributions. They're based on consolidations, right? Rotation, rotation, what are we doing here? When you break away this, you break away, it leaves low volume. Now we auctioned here, tested, too low, broke high, come back. And here's another little tidbit. I'm just going to give you something, and I try to minimize what I say here in the stream because it can create confusion. But you will start seeing consistent behaviors based on the participants. This is what the auction is about. Remember, the market's not made up of indicators. Indicators reflect, looking backwards, participant behavior. This process is the participant behavior that everything else that you guys attempt to overlay participant behavior to get a sense of what's going on. There's no indicators here. I don't use them because they create conflict and ambiguity and inconsistency. I'm just telling you me. I'm not saying it's right. But watch what happens. This is the selling structure. This in the higher time frame was our test. This is our long against microstructure. This was our obstacle, right? For the scale. Watch. We break high. What happens to the selling structure? The volume. Support. Support. See? So watch. Support, support, support. VPOC migration. Next, let's watch. Now, very interesting. We break low. Potential back to V. This is a Trader Lab structured trade. We're trying to get back to VWAP. Remember? Variable high volume node. We are moving higher. This market rotates. Now, remember I said, I know you're going to get crazy with me. Two things. Overnight high, which is the ETH high, important. This is like taking out the high of the day, except it's the ETH. You noticed on the open today, we attempted to fill the gap and we got within a couple ticks of the yesterday's high. What is so different about this? And here's the other piece. Too low. VWAP. Outside edge. Right here. Outside edge. Don't know. Watch. Now, this is kind of open field running, because we're in a bull configuration. The market does not have to do anything, which of course we all know. And if it's not a setup for you, or a structured trade, I should say, that you have vetted, come on, then there's nothing to do. Watch. This, and now you may have a structured trade. Now, I was looking at this, and I'm going, okay, too low. Where's my VPOC here? Is it right there? Now, too low. This is moving up. So all good for the long. Structured trade in the Trader Lab, VWAP to VPOC. However, and again, not a recommendation. I come to an outside edge. Now I'm thinking, well, we can do this. There's stops under here. But here's my outside edge. Let's look. And here's this. It's not a structured trade per se. Now I'm showing you fractal again. And if it's not your trade, you just sit here and you're a tourist. Watch. Microstructure. Here's your high volume. But this is, so you understand, this is reflecting all the volume in this rotation. This is retail at the moment. Now, anything can happen. If we come outside, we can do anything. You got to write that down. Every trade, every rotation, everything is random. So we don't know. So if you require the VWAP to VPOC, which is a structured trade, you don't have a trade. If you can read behavior, if this, then that, if not, then what? Then this is a long. Let me show it to you. Watch. Now, not a recommendation. I'm going to show you. Wow, I wish this thing would behave better. Microstructure, seller, and I'm going to show you this really up close. Now, you guys, if you are interested in any of this, you can always, in the Bookmap Discord Trader Lab chat, you can download the 60 PDFs so you could actually see these. And this is a structured trigger. Let me explain it to you. Market's coming down on sell stops, 22, and I'm looking for this. Don't forget. 7. Less. This is the only thing I use from indicator world. And I develop trading systems. I mean, I actually shared an office with George Lane, who invented stochastic. So I thought oscillators were the holy grail. And it turned out, of course, not so much, but that's besides the point. But as we come down, 7, 6, iceberg. Now, right here, I have no clue. I'm seeing the selling, and I can't tell. Listen, I don't know. You know, uh, I just always am narrating. If this, then that. If not, then what? If something doesn't happen, what does that tell you? It means the buyers might be in a hurry, motivated. And what else do we know? 41.17, right? You didn't forget, did you? So here's a trigger. Now it looks like it's going to come down and get to the VWAP. That's what I'm thinking. Okay, here we go. What do? Check the microstructure, blast off. Okay, now if you can't get into this, nothing to do. But where would the scale be if you did? VPOC. Very hard. Let's watch. So, if you can't take that trade, it's not your trade. It's not a big deal. Now, it's only 9 a.m. Let me keep going. I'm in a hurry here. I want to go. Now, so far, this is called the IB high, initial bounce. Remember the statistic. Remember, if you didn't get this, write it down. There's a 68% probability in this context with this opening type and everything else you guys already know if you follow the stream. There's a 68% probability we're going to take this out. And this is the first hour high. Okay. Now, will it? No clue. When? No clue. Remember, I am the clueless. I have to be clueless because I am clueless. What I know is I want to be long potentially for a statistic, you see. That's all I know. So let's see. I have structured trades. Remember, too low, right? VWAP to VPOC is a structured trade. So I don't remember what happened here. I just know I was very active this morning, like a whirling dervish. Here. This is volume. Remember, this was the potential long, and if you don't have a structure for it, you don't. Where do we come? This is the volume. Back here. Check. Microstructure. Again, and where? Outside edge. Don't know. Check. Chop. Oh, here's your divergence. 16 stops. 1. No seller. What is that? Micro high volume. Right there. Right there. I'm using fractals, and it may drive you nuts, and it's not anything you should be concerned about. Watch. See? VWAP. This is now a Trader Lab structured trade. This is the one we were talking about. You see it? Trader Lab structured trade, VWAP, here, the VPOC. So the way this one works, there's a couple ways to play this. You got to be on your toes. And the thing about toes is, and being on them, is you anticipate. Structured trades are about anticipating behavior. And then a trigger that you have defined and you can, recognize. Here's the sellers. Stop. See them 150, 46. This is the volume. Here, right in here. You can see it there. Okay. Test below. No seller. Break high. This is a long to here. If it's too tight, you can't do it. Pull back, it's another long. Remember what I showed you before. Triggering structure, you can't get it here. You look for the retracement to the microstructure, which is the volume there. Are you guys tracking? This is a fractal of the behavior of coming back to this below, or the behavior of coming back to this from below. Are you guys tracking? Is it making sense? How are we doing in YouTube? Are you getting something out of this? Does it make sense? And by the way, if you're in YouTube, remember, These are structured Trader Lab trades that you can study and vet and create statistics for. In my opinion, you can use this information that I share in the stream and in the Bookmap Discord Trader Lab chat to potentially build out the business of trading. The business is not what many of us retail traders think it is. I think we have fantasies about it because nobody tells us, or at least shares ideas and concepts. But so you guys know, there is not a right way to trade. I will say, I can tell you though what the right way is, and that is extracting metrics so you know you only get involved in the market where you have a statistical edge. VWAP to VPOC is a structured Trader Lab setup, if you want to call it that. I don't like to use the term. That's in alignment with the context, which is up. Are you guys with me? So this is your triggering. See the buyers? Now, if you can't exercise because this is where you need to scale, now we're bullish, right? 41.17. I don't know where the heck that we are in the market at the moment, but that's sort of up there somewhere. I haven't looked, but that's where I had a runner, and there's more possibilities, but that's besides the point. So I don't know where the market is. Once I start doing this, I can't look at my trading computer. Now here's your volume up here. So this is your trigger. Can't get it? You sit there and you're upset and you're frustrated. If you feel FOMO and you click here, you need to take yourself out behind the woodshed and do a little self-paddling. This is your job. You don't get it, you don't trade it. But you know this is too low in the microstructure. Do you see the symmetry? I spend time because I'm showing you what something called fractals, Russian dolls. Same process, same process, same process, fractal. Micro, get the scalpel out, but you can read it if you can interpret the language. Here, you can read it if you interpret the language. Back here to here, long, back to here, and then a helmet, you know. We move this thing, gee. If you put it on, so this, when it comes back, you take a long here, you wouldn't get your scale if you're running a tight stop. And I'll tell you, it's pretty close, which would be under here. So let's look. 97, call it 50, right? Yeah, 50. Do you get taken out? Let's look. 50 is where your stop is, right? Did we get 50? No. Or did we? I can't tell. We didn't trade 50, did we? Yeah, we did. So you would take a stop here. What's your risk on this? Let's go look. I want you to see. Against here. You get in at maybe 98.75, 99, 97.50. What is that? 6 ticks? I can live with it. I don't like it. Break high. Back to the volume. Long again. You don't want to do that? Don't do it. Scale ahead of this. Back to the VWAP. You see? So here, if you kept here, you wouldn't have gotten taken out. Just back to the volume. Same process. Potential long. Or you got whacked over here. You got whacked over here. You're long back in here. You scale ahead of this. You get long back in here. It's the same setup. VWAP to VPOC. Same setup. Just saying. Now, in a trade plan, what you need to be doing is deciding, and you do this by measuring it. You put your stop 1 tick here, and this is what happens. You put your stop 3 ticks, 4 ticks. The only way you know the answer is over a large sample size. That's the only way you know the answer. It's not, oh, I got 1 ticked. I got to tell you, I can't tell you how many times I get 1 ticked. And then, of course, I have an emotional response, which is not pleasant. But then I just put the trade back on again. So that's just me. And other times it comes to my scale and I'm unable. It happens to all of us. That's why trading is random. So anyway, another long scale. Okay. VPOC migration. This is turbulence here now. So let's watch. Where are we coming back to? VWAP to VPOC. This is the same trade. Same trade. Same trade. Same trade. Got it? Are you guys with me? Claren, am I afraid of fake outs? No. I can't be fearful. That's emotions. I can't let emotions, because I'm fearful all the time. You know, we're fearful because of our wiring. Um, but fear in the business of trading are two separate animals. Emotions have to be managed. In my opinion, the way you manage an emotion is by having a statistical probability that gives you the courage, and you accept the randomness of the behavior of the participants. I mean, why did we come here? You know, why did we come here? Why did we come here? Why did we come here? I don't know. But I know structure and participant behavior, so I'm interpreting it. And I know anytime I put a trade on, I take a stop like you guys do. But I also know what creates the behavior. That's the thing about the auction. And I know that if this is too high, that we can come up and reject it. See that? So if I have my structured trade, I got to scale. Scaling means get risk neutral. I'm running a 2-lot minimum configuration, so I can buy my stop on my runner, scaling, so I can have my stop under here, or under here, wherever you want to put it. You got to sort that out. And then I'm going with the trend. You see? And then it's north, wherever north is. You see? And then it's just get long, subject to a vetted trade plan. Let me try to get moving along here. I think you guys get the idea, right? Is everybody with me? Here, let me show you something else. Now, what is this? RIP. What is this? Low volume area, outside edge. The last time we had a little structure was here, too low. Here's the other piece, and this is how Bookmap can help you, and I can't get into too much about it, but 550 stops. When you start, and this is in the Trader Lab, in the PDFs, and also on many of the library of webinars. And if you're new, you guys should watch the primer first. It gives you kind of foundation. 550 stops. Why are there so many stops coming out? Those are buyers. Buyers. This liquidity right here, and this is absorption, was absorbed by this iceberg up here, and these executing here. Now, we don't know why. If I knew why this guy is selling, is it possible that this iceberg that's selling is taking a profit? The fact I see an iceberg does not supersede the context of the market, which is north. And remember, 4117 is where there's fuel. That's where the outside edge of a higher time frame consolidation is. You got to know this, so you know who's off sides, who are the buyers, the shorts, and new longs. But the shorts, that's what this is. Squeezeteria. Right here, the seller, iceberg. I see a reaction. Now, this I don't talk about too much, but I'm going to talk about it too. High volume. Watch. Now, I don't normally go into this, but I figure why not, right? It's Friday. Feeling groovy. High volume. Outside edge. This was the bullet train. Low volume area. See, there's low volume. What this creates is this rotation. If this is now retail in the microstructure, the high volume, which is created by this guy transacting, if we rotate below it, watch, and now the trend's up. Don't forget, context is number one. Write that down. This is all in alignment with the condition of the market. It's not mechanical. It is translation. Is this too low? I don't know the answer. It could fall out of here and keep going down to the next level. This is part of it. So right here, this is an obstacle. High volume. Watch. Pullback. You see it? Outside edge. Now, high volume. Break. Break high. This is now support. microstructure. If it doesn't pull back, you don't have an opportunity. If it came here, it's another long. It didn't. I want you to see it. Think like this. The volume and the breakaway are sellers and exhaustion. We had an obstacle. We had an iceberg drop a little bomb on the thing. Others see this. So buy stops. These guys trade the other side often. Break. And others, retail traders, go, oh my goodness, it's an iceberg, I'm going to get short. Or, oh my goodness, it's an iceberg, I'm going to bail out. Well, for me, 41.17. Why would I get out if I know the guys on the other side in the higher time frame are about to potentially get run over? I want to be long. If this broke low, selling trigger, but not into an outside edge, just watch, and breaks high, does this look familiar? So if it came here and then rotated, I'd expect more down. But when it takes this microstructure out, if it broke up and pulled back, it's the same as pulling back to that VPOC or variable high volume node or micro trigger structure. It's all the same. Fractal. So this would have been a long, but no pullback. Why? Pony Express, 41.17, right? Watch. I left my, anyway, this is where I flattened out because I'm streaming. What do I know? See, are you guys tracking? Does it make sense? Clarence, I hope I answered your question about the fear part. Yeah, I'm fearful always. But that's not part of trading. So, I'm fearful because my emotions say, you want to be right. I don't want to be wrong. I'm looking for approval. I have a psychological need to know what I'm doing, which in trading has nothing to do with what the outcome of any trade is. Guys, write this down because it's so easy to forget this. The outcome of any interaction or trade is random. That's why you need a statistical edge. And here's the simple way to think of it. Las Vegas, the casino has a statistical edge. They deal and the cards come out of the deck randomly. The gamblers are on the other side of the table. The gamblers play the game randomly. Do they pull a card? Do they toss a card? What do they do? I don't know. Hit me, don't hit me, blah, right? Call, bang. All random, all random. It's the same exact thing here. Random, random. You are not responsible. You can't be. Your responsibility lies in being responsible and accountable to only one thing, a trade plan that is vetted and has a statistical edge. And it's really simple. The business of gambling in Las Vegas is the house versus the gamblers. The house only plays games with a statistical vetted edge. The house accepts the randomness of the cards and the behavior of what comes out of the deck and what the gamblers do. So they have no control over that. They control how they play the game, and they only play games with an edge. They play the game exactly the same way. The dealer doesn't change the game because a gambler wins. The house plays the game the same exact way because they understand that they extract their edge over a large sample size of interaction with gamblers. They don't change the game. They look at the losses as overhead and cost of production. Write that down. As long as you have a statistical edge, and that's the whole basis of this business. Remember, the business of trading is about statistics and extracting the edge. That's the work. And you can do it one setup or structured trade at a time. One creates a template for you to build the trading business. Once the light bulb goes off and you can just discipline yourself to wait for structured trades, you might, like others, and it's not for everyone, you might find that your outcome changes, that you can manage your emotions because you'll open your trade binder to the setup you anticipate. You'll have the discipline and enthusiasm to wait for it. You will put the trade on based on the work you have done to extract the metrics that tells you have a probability of one thing happening over the other. And if it's positive, your job, because you've done the work and you've waited for the trade, is to put the trade on and let the random distribution of outcomes play out. That's your job. The rest is not up to you. You have no control over any of this except your own behavior. Remember, losses are cost of production. Do you want to be in the business of trading or do you want to be a gambler? That's up to you. Now, I know we all have emotional and psychological needs. I get it. By the way, where did we come? Outside edge. Where's the volume? Here. 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 Where's the obstacle? Here. See? Here. Bing, bing, bing. See, I'm not saying this is anything you guys should do, but I want you to understand something. It's something you can do at some point. But if you run ahead, it's FOMO. If you don't put in the basic of work to understand market mechanics and develop the discipline to actually execute a plan, I'm going to suggest you don't have longevity potentially in this as a business. We're all in a hurry. That's FOMO. If you're in a hurry and you're making it up as you go, or you don't have a trade plan, it's FOMO, because if you visited this stream, you might have an understanding of what maybe the reality of this business is. If you can't control or contain yourself to do the work and lay a foundation, you're the gambler. And I can suggest to you that based on the statistics that we all know for retail trader survivor rate, it's not high. And the reason is they're gamblers. And for me, I want to sit on the other side of the table. I want to be with the house in Las Vegas. I want to have a vetted plan and the discipline to execute it, and I want to extract the dollars from the gamblers over time, accepting that the outcome of any interaction with the gamblers is random. We don't control, right? So that's what the Trader Lab is about. You're all invited to visit the Trader Lab. I just want to remind you, if you're visiting the stream for the first time, this is about the business of trading and understanding market mechanics and behaviors. You can go to bookmap.com. You'll see a link. Join the Discord chat. Come over to Trader Lab. Download the 60 PDFs of structured trade. Study them. Watch the primer webinar, and there's a library of webinars narrated in real time up to 4 hours long if you want to abuse yourself. This is the business of trading. You don't have to be a Bookmap subscriber. You won't be solicited. Let's continue. If you have questions, post them. Let me show you microstructure. Now, we got our stops. Remember, this was the target. Now, we know there's the potential for buy stops. Everybody remember, this is what we started at the top of the stream. If you're in the Bookmap Discord Trader Lab chat, before they open, we talked about it. 41.17. Now, for me, I just leave it there, So I'm not saying it's a recommendation. Now, here's the other thing I know. If this is the outside edge of a higher time frame consolidation, what's above it? Buy stops. What do we got sitting here? A strike price. Now, you have a couple choices. You fold up your tent, you go, get yourself coffee and have your breakfast delivered. Or you're managing and trailing. Different part of the process. This right here, watch. I'm just going to take you right into the minutia. Watch. Break high, chop. Microstructure, break high. Buying structure, micro. Here's the volume. Watch. You could do this anywhere you want. Test. Too low. Blast off. Here, too high. There was the seller. Test. You see it? Fractals. You could be doing this all day. I mean, I'm not saying you can be doing it because there's no range. But how about you can read this and start learning the language of the market? You see? Too low. Break high. I'm not shopping here. This is like your convenience store down the street. I'm not paying $7 for a pint of ice cream Saturday night, 10 o'clock. So there's not, if this is too high, I'm not paying that. Break. In the microstructure, break, so far selling. Where was the buying? Here. If we take this out, where do we go? Next place. If not, then what? If this, then that. If not, then what? Then that. Then what? High volume. Obstacle. See it? Bing, bing, bing. break high. Where does it pull? Volume. Got it? Where's the next place? Liquidity. Got it? Watch. High volume, break high. Where's it pull? See? Too low. Break high. Are we having fun? I don't know. Boy, look at those buyers. Don't know. This is your structure. Break high. Break low. Uh-oh. Break high. This is your structure. Too low. Boom. See you later, alligator. I hope you're getting something out of this. And I'm not saying this is a recommendation. I'm saying the point of this, the point of this stream is to help you read the basic function of the market. What is the market all about? It's not an indicator driven market. It is a participant based market. And here's the thing about the market. It does the same process in all fractals and time frames. You can get as close to the market behavior as you choose. It doesn't mean you trade this, but you can narrate it. Okay, if this and I break low, then that. Then this is the last time it was too low. Retail, break high. Oh, too low, maybe. Here's your test. Look at the microstructure. See it? Break high. Test. Too low. Run. Microstructure. Break low. Uh-oh. Where to? Well, I know this was too low. Break low. All right. Break high. Too low. Stop. If you got out here, would you shoot yourself? Now, it could do anything. It could just do this and go up, make a new high. I don't know. But I can tell you, at this point, I don't have an issue putting the Lamborghini in the garage for now until I get back off the stream. And then it's back to business. Watch this. Volume, extreme, break low. See this? Pull back here, pull back to the volume, rip. You're out of here. Catch you later. Thanks for playing. See? And this is not a short for me. I don't do this. I don't counter trend trade. Why? Why do you think? Now, I do use these structures potentially for, I mean, in other words, what in a different context, I'd be getting short. Okay. In this context, which is north of the border, I am using the selling structures for trade management. I hope that makes sense, and I hope you're getting something out of this. Are you getting some out of this, guys? If so, give a thumb up in YouTube. It helps. Subscribe to the channel. There's a lot of additional education, stocks, options, market maker behavior, swing trading, algorithmic behavior, and of course, bookmap, order flow, understanding how to read this. There's much more that you can do to get in alignment once you learn. What my focus is to help you understand market mechanics, and then you can use a tool like Bookmap to get under the hood. I call it the tip of the spear because this is where I interact. And the more I can open this up, which you can't do with your regular, you know, I mean, look, I've used all the charts you guys use, range charts, tick charts, point and figure. I could go on and on. I've built trading systems. I started in 1980 with an abacus and a slide ruler. I still have my original ruler, by the way, where I drew trend lines as a souvenir. Before we had computers, before there was an internet, it was not easy. And when I started trading, there were no off-floor traders. All my friends were floor traders. They didn't get what I did. And I knew what they did, but couldn't do it. We placed our trades on a piece of paper and pick up a phone and call your guy who would signal your trades into the pit. That's where I started. And I can certainly spend a lot of time talking about it. All I can tell you is if you thought about it, I've probably done it, and it probably, I'm going to say, is my tuition was high because there was no information. You guys have the opposite problem. The reality of trading, though, is a business, and I don't know how many people share the reality. There's no magic indicator. There's nothing that's going to solve the problem of understanding how the market works. Indicators are proxy, right, to overlay over participant behavior. I think you might find that if even if you want to work with indicators, if you can understand how the market works, then you might be able to deploy them better, because one size doesn't fit all. And most of us think it's just one thing. The market doesn't operate that way, in my opinion. If you find this interesting, useful, or if you're curious, go to bookmap.com, join the Discord Trader Lab, visit, download the 60 PDFs of structured trades, study them, watch the library of webinars. If you're interested, there's a community like-minded traders who are building out the business side of trading, who have gone down the same paths we all have, and maybe don't want to wake up with Trader Groundhog Day, where you're doing derivatives of a process that may have a negative expectancy. That means a guaranteed loss over a large sample size. If you can't limit it, measure it, you are the gambler. Ask yourself, if it's not working, maybe instead of waking up doing the same derivative, try look at something else, see if you can improve it, if that's your objective. You go to bookmap.com. You don't have to be a Bookmap subscriber. You won't be solicited. It's a great community of like-minded traders looking to leverage their collective experience. Bring your experience. We can all get better. I'm still looking to get better, and I always will, because there's always room for improvement. Or there's a link at the bottom of YouTube that'll take you to the Discord chat, and come on in, visit, say hi. And if you're in Bookmap Discord Trader Lab, these streams are available exclusively to you. And this one will be available through the weekend. After that, they are gone. So appreciate you guys visiting. I want to wish you a great weekend. Trade safe. If you don't have a plan, it might make sense to think about the business of trading. And if you're not getting the results you want and you're looking to be a career minded trader, you might want to just take a different viewpoint if what you do now is not getting you the results you're looking for. And while this is not for everybody and past performance is not indicative of future results, you might at least find it interesting at the least. Please give a thumb up. Appreciate you visiting the lab, and I look forward to seeing you guys on Monday. Trade well. And thanks for visiting the Trader Lab. Don't forget, thumb up, guys. Means a lot to me to know that you got something out of this. Thanks again. This is the trading process hierarchy. If you haven't seen this, and it's part of the primer webinar, you can watch this in the Bookmap Discord Trader Lab chat. Watch this one first so you understand the building blocks and you understand this process. Thanks again, guys. Look forward to seeing you soon.